Contract volume is nosediving at this point in Greater Nashville. I've been covering this for several weeks, but Kevin Warsh did not help things at all. In fact, after the press conference for the Federal Reserve, the mortgage rates started spiking. Typically, it takes about a month to see the full effects of a year-over-year higher rate in demand. That means the headwinds of mortgage rates haven't even fully set in yet. This is particularly problematic because demand is already down 8.3% in Greater Nashville, and there are more headwinds for mortgage rates to come. Nobody knows where mortgage rates are going to go, but we do know the risk is to the upside for several reasons. One, Kevin Warsh seemed very comfortable with mortgage rates rising. He basically said that in the press conference. Two, Fannie and Freddie cannot continue to buy mortgage bonds indefinitely. If you'll remember in January, Trump said he had instructed representatives to buy $200 billion in mortgage bonds intentionally to lower rates. According to this calculated risk blog post, they stopped buying bonds in the second quarter, adding to the headwinds we're seeing on mortgage rates. All right, and number three, the U.S. deficit could skyrocket next year. You've heard Trump. It's not so secret that he's trying to basically double the defense budget to pay for this war in Iran. And regardless of what you think about it politically, this is having the effect of larger deficit spending, higher borrowing costs for the U.S. government. And we can see it in how the bond market is responding. But even if mortgage rates were to drop, it would have to drop faster than last year, which is why I think it is a headwind. Okay, so let's go to Nashville, but just so you know, what I'm showing you in Nashville, first of all, is stuff that won't be reported for months out. And the reason why is because I focus on contracts. Contracts are leading indicators. Let me give you an example. Right now, we're entering in August, so in the next week or two, you're going to hear home prices in July were flat. Here's the problem with those reports. Home prices in July were contracts in May and June. That means that data, by the time you hear it reported, is over 90 days old. But if we can track contracts, which I do daily, what we can see is what's going to be reported in 90 days. Let's take a look at contract volume. It's down 8%. And what this looks like is Davidson County down 13%. It's still double digits down. This is a massive, massive drop, but Rutherford has taken the crown for where the biggest drop in contract volume is. Now, this is very important. I can't explain how dramatic of a drop that is in contracts. That is a crash in demand. Now, whether or not it translates to price, we're going to talk about that in a second. But when it comes to buyers just absolutely disappearing, because you got to remember, this is in free fall on a 4-week run. I mean, this is a 31-day tracking of contract volume. So if it went to zero, like if buyers just completely disappeared, it would take 31 days to show up on this chart. So when you see a drop like this, basically what you're seeing is the activity just disappeared. And that's exactly what happened. And just so you know what date that was where things really shifted, it was really starting right here on July 15th. That is when things just really changed for, I believe, not just Nashville's market. I believe this is a national trend. We haven't even started seeing the major headwinds for mortgage rates come in yet. Next 4 weeks, we're going to start seeing headwinds from mortgage rates on demand. I'm texting with agents. One said it's the worst time he's seen in 20 years. And this is a guy who's a veteran and someone I respect deeply. I have another guy, high volume list agent. He said he thinks his showings are down about 50%. What is the reaction of sellers? Okay, this is the demand side, but what is the reaction to sellers? Well, first of all, let's look at active listings. Active listings are up 6.2%. Keep in mind, these are single family numbers I'm giving you here. If you ever see something that's inconsistent, it probably has to do with whether or not it's single family, condo, or both. But right now we're talking single family here, up 6.2%. You can see Maury up 22%. Cheatham down 8%. Cheatham's also like low, it's probably the lowest volume. So some of the numbers may skew for Cheatham just in general. But look at Davidson. We're seeing sellers pull back on their listings compared to last year. When we take the ratio of active listings to contract volume, this to me is the most important ratio. It's actually a ratio that I provide on a map so you can just see it at a neighborhood level, and then you can see it as a shifting from previous years. You see those dark blue areas are where it's shifted the most. The red areas are where it's shifted the most the other way. We called out Belle Meade as an area that had shifted very dark blue just a couple weeks ago, and now bunch under contract. You can see how it dances back and forth. So what we would see is this blue and red map, it changes pretty frequently. And that's good news if you're a buyer or a seller. You want to buy when it's blue and you want to sell when it's red, basically. Oh, by the way, Troubadour, which is the most expensive neighborhood I know, 16 active listings, 1 under contract. But look at the trend. You go back to May of 22, there were more under contract in Troubadour. I mean, the average house in Troubadour is like $7 million. It's really like, here, let's look, sales price. I mean, you can see like $5 to $7 million is like where most of them sell. And what we can see is that active listings continue to build. Contract volume's almost nothing. Price cuts are picking up. To me, it looks like outside of this one outlier, it looks to me like prices have been falling. That's what it looks like to me. And if you go to price per foot, that's where you'd really be able to see it. Really nothing has sold for $1,500 a foot since last year. Kind of interesting. Active to contracts, one of the most important ratios you can see, even though active listings in Davidson County are flat, what we're seeing is when you compare that to contract volume, 595 contracts at that rate, we didn't see that rate last year until November or January. I mean, this is winter level demand in August. People are growing their inventory where the market has been stronger and where there's been more success in selling. 1 to 2 million, up 146 listings. This is a stronger part of the market. 500 to 750, this is right around the median, just above on the other side of the median, up 243. But you can see up 10% in active listings at 5 to 750 and 12% 1 to 2 million. Now, the 2 million plus is also up 10%, but I will tell you, we're starting to see some changes in the $2 million plus. Let me show you what I mean. Price cuts as a percentage of active. Look at that, 2 million plus. That's what you want to see if you're planning to make an offer on a $2 million house. The motivation for $2 million houses is skyrocketing right now. Sellers are a little more savvy. They typically don't cut their price nearly as often in the $2 million category unless the market is shifting. This to me is a symbol or a sign that maybe the $2 million market is shifting, just like I was showing you in Troubadour. All right, active listings have taken a price cut, 40.3%, most dramatically seen in places like Maury, Dickson, Cheatham, and Robertson. Let's just look at number of price cuts. What we see, Maury, Dickson, Sumner, Wilson, they have a lot more price cuts than they did last year. Believe it or not, Davidson, again, one of the softest markets. Believe it or not, there are fewer price cuts in Davidson County right now for single families than there were last year at this time. I find that absolutely fascinating. This is a sign that sellers are not getting the message that buyers have basically disappeared. Okay, this is a tug of war. I don't know how else to say it, but sellers are not capitulating, and they have a lot of them, many of them, low cost to hold. They will hold out longer than a place like Texas or Florida because it just doesn't cost them that much to hold out. We're seeing it in the data real time. You can see it right here. It is obvious that sellers are not there yet. Now, will they be in the next month? If demand continues on the trend that we are seeing, it's hard to imagine there won't be a lot more motivation in 4 weeks, but we will see. I do not know. I cannot tell you where prices will go. I can just tell you what I'm seeing in the data 3 months before you get it in any other reports. Tell me what you're seeing in the data. Tell me what your anecdotes are. Tell me how many people are showing up to your open house. These things can flip in an instant. There are things that can change the housing market in an instant. But to me, the headwinds are there on demand. We have not seen it in price yet. If you're thinking about making an offer, go lower. This is the time to go lower. Be aggressive. You may get the stiff arm. You may have offended the sellers, but the truth is, time is on your side. Take your time. Be careful out there. I hope you guys have a great rest of the day. I look forward to seeing you next Saturday. Thanks for watching.